What's up, everybody? Welcome to Heresy Financial. My name is Joe Brown, and we've had an exciting day for anybody who is long silver before today. As of the time of this recording, silver is currently at $29.25. That's up just over $2.30. Meanwhile, mainstream media like CNBC is going absolutely crazy about silver, which to a lot of people, rightfully so, looks a little bit suspicious. So in this video, we're going to ask a couple of questions. Number one, who's behind this push to trade and get into silver? Number two, what is likely to happen? What's the likely outcome of this? And then number three, what is the likelihood that this could actually take down the financial system? Ready? Let's dive in. Unless you live under a rock, you've probably seen at least one headline and multiple videos talking about how the Reddit horde or the Reddit rebellion or Wall Street bets is now taking on silver. They've turned their attention from GameStop and AMC over to silver. Now, that's not entirely true. One quick glance at Wall Street Bets, you can see that every single post is about one of two things. It's either still hold and buy more GameStop and don't trust the short interest dropping numbers that are coming out right now, or number two, it's people saying don't invest in silver. It's not us, it's other people, it's somebody else. But to be honest, that's not actually a big deal. The term Wall Street Bets or the Reddit rebellion or the Reddit horde or whatever's being thrown around out there is honestly now being used as kind of a synonym to the retail trader. And obviously Wall Street Bets doesn't have a monopoly on the retail trader. They are very, very tightly controlled on what types of posts are allowed to go up. The moderator is extremely efficient at removing or blocking new posters, and so they want to keep that timeline and that feed very clean, and so rightfully so. You know, they can do whatever they want with it. So it's not Wall Street Bets pushing this, but the question then comes out, who is actually behind this then? Who's the one spreading the rumors that everybody should be buying silver to crush the banks? Well, me, right? Like there's a lot of people just like myself who have been talking about the short positions and the fragile system of the banking system for a very long time now and saying, hey, if you want to get your wealth out of that system and if you want to front run some of the collapse that's going to start to happen at some point, it's inevitable, put your money into gold and silver, right? So number one, it's people like me. 100%, I'll take as much credit for that as anybody wants to give me. I can't move markets by myself, but I'll throw my 2 cents out there for anybody who wants to listen. Now, the last kind of party that's going to be behind this is where people start to think this starts to look like nefarious, because there's large institutions who have giant long positions in silver, and yes, many of them are financial institutions. And so kind of behind the scenes, there's this thought process that maybe it's these giant institutions who have a ton of silver and are trying to compensate for their losses that were happening in GameStop, saying, hey, don't buy GameStop anymore, go buy silver. And so it's allowing them to close out their shorts, cut their losses, and make up for it on the silver gains after everybody's rushing in since they already have large positions built. And while that could partially be true, it's definitely not the whole story whatsoever, large in part because most of the players who have giant long positions, they're not storing it physically, it's paper exposure. And at least from what I'm seeing, the people who are saying buy gold, buy silver, this puts the pressure on the financial institution, get your money out of the system, the emphasis is being put on get your physical, don't just do it in paper form. Don't just buy an ETF like SLV, because in their prospectus, they detail in there that the bulk of their investment has to be in physical silver. But it doesn't mean 100%. And so there's definitely room for at least temporarily having some paper exposure. And so in the end, anybody who has just pure price exposure through paper will at least somewhat have some pain to deal with, because as everybody knows, there's not enough physical to back up all of the contracts that are being traded back and forth today. And if push comes to shove, many of them will be settled in cash, cash in lieu instead of physical delivery. So then that begs the question, what is likely to happen from this? What's the likely outcome? Because some people are saying, silver could go to as high as $1,000 an ounce from this. So is that possible? Sure, anything is possible. It doesn't seem like that's very likely, in my opinion, at least right now. Number one, the short position globally on silver is not what some people are saying it is. Yes, there are some isolated giant short exposures to silver. On COMEX, there's about 100 million contracts short right now, but the other side of that coin is that much of that is actually hedged with physical in London, and some of these markets are very opaque, and you can see one part of them which shows, hey, there's a big short position here, but you can't see what else is going on. Now, even if they are hedged, even if most of that is hedged with physical in London, there's still very little float in London. So I'm not saying there's no pressure here, and I'm not saying that none of the big banks or any part of the financial system will come under stress from a big rise in the price of silver. I'm just saying it might not be all it's cracked up to be. Now, the other reason why I don't think this is as likely to have as meteoric of a rise as something like GameStop had is simply because there's just not enough focused energy on this right now. I mean, if you look at the focus that GameStop had, just as an example, I mean, stuff like this has happened many times throughout history, but just this is the most recent in memory. If you look at the focused attention, you had millionaires, you had billionaires, you had celebrities, you had everybody jumping on the bandwagon and saying, I'm going to put some money into GameStop. And it looks like that focus has fractured, right? There's a lot of people still invested in GameStop, a lot of people still going after AMC. Some people now, a lot of people are going after silver, but it's the majority has kind of splintered. And now there's not as much focused attention from the retail trader all on one thing to cause pain in a specific point. And even among the money that is focused on silver, in my opinion, it's not even focused enough because really the key is physical delivery. And I've talked about this before, but if you just buy SLV, they can at least temporarily back some of their fund with futures or other forms of investment like unallocated silver. And there's too much focus on things like miners. And even though miners will do really well from a rise in the price of silver, just buying the stock of silver miners doesn't actually have an impact on the price of silver. And so I think what's likely to play out here is that we have, maybe a couple more days of really solid performance in silver, but it fizzles out and then the price just drops like a rock. I could easily see silver hitting 32, 33 in the next couple of days, and then subsequently dropping back down to something like 26. No problem. When people realize it's not going to go up to 50 or 100 or 200 within the next week or so, that momentum from all that new money could very easily fizzle out and the price could drop very quickly. Now, fundamentally, none of this has changed my outlook on silver. The fundamentals are still fantastic. When you look at the supply and how the supply is driven primarily by other commodities, there are very few actual silver mines. Most silver is produced as a byproduct of mining for other metals. When you look at the fact that you need a lot of silver to produce many of the products in this green energy push, when you look at solar, when you look at EV tech, a lot of this relies on a lot of silver. So when you look at a supply-demand standpoint, very, very bullish for silver. When we look at silver in light of its relationship to gold and how many ounces of silver equal an ounce of gold, that's the gold to silver ratio. Looks like silver is very undervalued at this point historically. When you look at the monetary usefulness of silver, even though it's been dropping for hundreds of years, not just recently, the monetary usefulness and monetary value that's included in silver has been on the decline for a very long time, but there is still some monetary value there. It's not purely an industrial metal. And then you pair that with the fact that we're having record monetary dilution and money printing all over the world. We've got a lot of tailwinds behind silver right now. So nothing for me has changed fundamentally about silver at all. I didn't change my silver positioning basically at all. Made a few little trades here and there over the last couple of days, but my core silver position hasn't changed at all in anticipation of a potential giant short squeeze or with my current outlook now that it could very well fizzle out within the next couple of days. Because when a monetary system starts to collapse, there's always a mob or a trigger or a catalyst that usually gets looked at and says, people say, hey, we're blaming that mob for taking down the fractionally reserved bank for causing that bank run. It's not the mob's fault. It's the Ponzi scheme that started it to begin with. The mob is just the natural consequence of creating a system like that. So what are the odds that this actually turns into something that takes down the current fiat financial system? And what would that look like? What would that take? Well, I think that this particular kind of series of events that's unfolding right now is very unlikely to take down the financial system. Something within the next couple of weeks, couple of months, even the next year. Don't think this is going to be it. It's possible, I just don't think so. Here's what it would take. We know that there are some decent short positions in silver out there. We just don't know who has them and what kind of protection they have on the opposite side. But a large enough rise in the price of silver and running out of physical silver to deliver, causing huge premiums to spike, this would cause massive volatility and things to happen in the markets that are not supposed to happen when you look at, value at risk, and when you look at standard deviation, when you look at some of these traditional models that hedge funds and banks use to manage their risk. They're using things that don't match up with financial reality. And so a large enough spike in the price of silver could absolutely cause some massive losses with key banks around the world, specifically banks in Europe. If you look at banks like HSBC and Deutsche Bank, some of these banks have massive undercapitalization problems where their balance sheet is so big that a 5% or a 10% loss on their balance sheet is bigger than their entire market cap. That means, again, a 10% loss in their portfolio would cause their net worth to be zero. That's how leveraged up some of these balance sheets are. Now, how are they able to do this? Well, number one, leverage, and number two, because they're using these valuation, these risk models that tell them, hey, you've got this trade that is kind of, the opposite of this trade. And so since they're paired up together, you can do, 100 times the amount for that specific trade than you could if you just did one of those trades, on its own. And so they have tons of trades matched up against each other that are theoretically supposed to offset each other. But when things happen in the market that aren't supposed to happen, like, physical silver running out, or a silver run up in price, silver doubles in the course of, a week or two, something crazy like that, which I don't think is going to happen, but very well could, you could absolutely have key losses in these banks. And these are considered GSIBs. They're globally systemically important banks. An example of this is HSBC. Last March, when there was massive demand for gold, when everybody was piling into gold as the coronavirus kind of started to roll through and make headway, and governments were starting to go into lockdown, and nobody really knew what to expect. There was a lot of money going into gold. HSBC lost $200 million in one day just on their gold trading desk. Now, that's more than their gold trading desk usually makes in an entire year. And that happened when people were not even trying to take down the banks, to punish the shorts, to punish the hedge funds. That was just people saying, hey, I want some gold. And so if any of these banks have too large of a short position or exposure to paper gold, this could absolutely result in a domino effect where one or a few of these financial institutions that are considered globally systemically important banks get taken down. Now, here's the key. This would need to bleed over into gold. I don't think silver alone has the power and has the exposure by some of these large institutions to do this. This would have to spill over into gold. Maybe the price of silver goes up enough where people start to roll some of those gains over into gold. Maybe the story makes it out there and people start talking about it and looking into the details and realize, hey, most of these hedge funds and most of these banks and these gold trading desks and the bullion banks, they don't actually have as big of a short position on silver. Might be manipulated, but a lot of that was due to spoofing. That's not due to just holding short positions for extended periods of time. And so it's very possible this rolls over into gold. And then there are some massive shorts. $35 billion to be exact for, the global net short position of these bullion banks. And so this could happen in one of two ways. Maybe the losses that are caused by a run up in silver cause some of these desks to have to start closing out their gold positions to cover the losses, but that makes everybody else's losses worth because there's so much money short gold right now. This would cause a domino effect, losses to start to rack up like crazy. GSIBs could definitely start falling like dominoes. Now, here's the other way to look at this. Anytime throughout history you have something like this happen, people rush back in, fiat currencies collapse. There's something at the same time happening where basically people are just leaving that crashing, that failing fiat and rushing back into gold and silver. And so something like this starting to happen where silver goes up 10, 100 times and gold goes up 5, 10, 20 times when measured in the fiat currency, that's not necessarily something happening where, hey, there's just a bubble in the metal. Usually that's just a different way of stating the fiat is collapsing. And so to wrap it all up, what the likelihood of this playing out this way, just from this current series of events happening, given what is currently happening right now and how the focus is kind of fractured and split even among the people who are buying silver on where to focus that buying pressure, my best guess is we have a pop and then a drop. That'll shake out the weak hands and it'll set the stage for a very, very nice, healthy bull market, really, really good, healthy run up in silver over the next couple of months. At least right now, not likely, in my opinion, that this causes a massive domino effect that just starts knocking over financial institutions all around the world. It might turn into that, and I might change my opinion on that, but right now, I'm not convinced. So I'll keep monitoring the situation and letting you know what happens, what new information comes out, and what it looks like is going to happen. But if you'd like to build your position or even take a small position, even understanding that this might be a short-term run and we might be in for a little bit of a drop at some point, or if you just want to get your account ready so you are ready to kind of spring the trap and buy if there is a dip, I've got my recommended resources linked in the description below, whether you want to request physical delivery or hold your metal in allocated, segregated storage in another country or in your own country, or if you'd like to hold it in a self-directed IRA so that you shield yourself from any capital gains taxes that you might have on the metals. As always, I really appreciate you guys. Thank you so much for watching. Have a great day.